Hey, good morning, everybody. A lot to talk about this morning. I've got two lessons that I'm going to share that's going to help improve your efficiency. But since some people are late starters, I'm going to give those people a chance to join in. So, again, I'm going to give you two lessons, great tips. They're going to come in about 5 or 10 minutes. I'm going to talk about what's going on in the world first, because first off, the same way we had a blizzard in Buffalo and upstate New York and the Northeast, there's a ton of snow in Ukraine right now. So the battle's going to get a lot worse. The energy is cut off. They have 4 hours of energy in Kyiv per day. So that's one thing that's affecting the world. What else is going on? China COVID cases spiking. I said to you guys last week, China COVID cases are spiking, but just because nobody reported it and China's stock market was going up, people are like, okay, I guess nobody cares. Maybe they're going to change their policy. But they did not change their policy. They're going to go into lockdowns. I'm going to get back to that real quick because will China affect the U.S.? That's the question. China COVID cases spiking. Mentioned that for a week and a half straight. It's finally being reported by the news. Will that affect our stock market? We'll talk about that in 1 second. Disney. New CEO. Disney's up probably 9% pre-market. What happened? Analysts came out and they said, new CEO sounds good. Disney price target 120. Disney price target 125. What do we know about the retail trader? We know the retail trader loves to buy the price target. They up a price target and the retail trader's like, I can't wait to get in. Let me buy some of this. Let me buy some more. So again, let's go back to China. China COVID cases spiking. So here's the question, because our markets consolidated this past week. We saw 394 as a low on the SPY, 4 days. It bounced off 394 on Friday. So let's just bring up that chart really quick. Let me see if I can do that for us. Okay, so most importantly, here's what I want to show you, okay? I have the minute-by-minute chart, but let me just bring this aside. You can see that all of the volume was buying volume end of day, pushing us from 395 to 396, okay? So we know that there's support, and there's been support at 394 because we're right here at this level. So as you can see this, and I'll bring it back. Now what I want to show you about the volume is take a look at this volume on the right side, right at the end of the day, okay? Now as I bring it back, you can see what the other volumes are. Okay, so you can see next to it on the right, volume is like 1/10 the size. Yet when you come in, it's pretty much even as the market went down. So do I think we're going to see 397 again today? Probably, even though we're red pre-market. Let's just go to the 3-minute. Again, you could see the end of the day and you could see the start of the day. So when the start of the day and we spiked up in the morning and there was a ton of volume on Friday morning because institutions like to buy in the beginning of the market, first 10, 15 minutes, and the last 10 or 15 minutes. And I've said this day after day, so you guys know that by now. And all the other stuff that happens during the day is technically bullshit because based on the volume, most of the activity in the beginning, most in the end. So let's just go back to a 5-minute just so we can take a look at the previous day. Again, this is a bullish chart from Thursday, okay? We started down here, gap down, filled that gap right here on Friday. So now I believe this is consolidation. Again, if the U.S. is affected by China, everything's going to go down. And here's the catch. J.P. Morgan, Bank of America, and Deutsche Bank gave their best case scenario for 2023, for next year. Their best case scenario is recession. Recession is their best case scenario. Okay, so that's a little thrown off. Next, earnings this week. Very important because there's not that much data coming out until Wednesday. But earnings this week, you've got Dell, important, Urban Outfitters, which is part of our retail sector, Best Buy, which is also retail, Autodesk. You have Deere, which is like a materials play, Deere like Caterpillar, like Honeywell, all plays like that. And then you have Dollar Tree. As we're heading into recession, what kind of stores get more sales? Dollar Tree, the dollar store, et cetera, et cetera. They're both under the same umbrella. So I would look at Dollar Tree. Why else Dollar Tree? Because institutions own a large percentage of that stock. Okay. Next, let's get on to strategy sessions, okay? And these are the tips that's going to help you because hopefully they're going to help me trade better. And if I trade better, you'll probably trade better. It's just how it works out. So what I used to do when I'm entering to an options position, and I say to myself, okay, I'm going to buy calls. I'm going to wait on the dip. I'm going to enter at this price, and I'm going to figure out my exit strategy. So when the stock or ETF goes up here, I'm going to ask for XYZ on my option. Now here, that's the same thing I do every single options trade. Now, what I don't do is look at the downside potential first. As I'm buying to the option, I should say to myself, if the market dips to the low point of 393 on the SPY, then my price of my stock will be here and my option will be cheaper and I can get better entry. And then I would say to myself, what if it dips further? What if we see 392 on the SPY because today's red and China's out there and things of that nature? Well, let me figure out what my best entry would be, because a lot of the times I'm looking at my stock and I'm looking at the dark pool levels and I say to myself, there should be support right here, which is generally true unless the market breaks support. If the market breaks support, then all of your stocks, no matter if it's Tesla, Apple, Netflix, doesn't matter, they will all go down to a lower price. So again, I focus on upside potential, whereas I should definitely focus on both upside and downside, because the downside potential might allow me to get better entry in my starting position. Okay, another key piece of information. Okay, we all know that I followed Tesla for a while. I used to talk about Tesla's forward PE. Forward PE, price of the stock over the earnings, how much they earn per year. So you take the price over the earnings. Tesla's forward PE for next year used to be as high as 72. And I did a video on Tesla months ago, and I said it should come down. It wouldn't surprise me if we were at 39 or 40 on Tesla's PE, which would be like double Amazon or Google because people like Tesla that much more. Well, I just looked at Tesla's forward PE this morning, and we're back at 42 or 42.9. Now, the last time I saw Tesla with a forward PE of 42 or 41, it was right in that area, it bounced higher. Now, am I saying it's going to bounce higher today? No, I am not. But I'm telling you, a lot of people, a lot of institutions, a lot of big money still likes Tesla. So I believe Tesla could be nearing its bottom. So that's going to be on my watch list this week. All right, so back to my strategy. So my new strategy of looking at the bottom side and the top side, it's going to give me better entry, all right? If the market bottoms once, I'm going to wait for it to bottom again. Same on the top side. We've always heard the term double bottom, triple bottom, double top, triple top. That means triple top means goes up to the top, rejects, goes down, goes up to the top, rejects, goes down, goes up. So once it rejects 3 times, it's telling you this is a good rejection area. I mentioned that last week on Friday. As futures were ripping on Friday, I mentioned that there was supply side or excess supply in the SPY at 397. But it wouldn't have surprised me if we bounced on open to 399. We didn't. It didn't even cross, maybe it crossed 398. But let's take a quick look. What happened on Friday? SPY. Let's just see where we were. Okay, 397.81 was the top. So when I said 397, 398 is a supply zone, it held true even though futures were ripping on Friday. So until that supply zone is broken, my top side on the SPY is going to be the same number that we hit the high on Friday, a little under 398. Understand, if a bull case scenario happens and we break through 398, then you're going to see 401. And if 401 happens, you're likely to see 405. So that's your bull case scenario. Right now, the market is consolidating, and it has been for the past week because I've mentioned the previous Friday, Monday, Tuesday, Wednesday, low on the SPY, 393, 394, 394, 394. And then again, we'll go back to Friday, low on the SPY, 393. So again, I'm going to look at support at 393. I'm still a buyer at 394 on the SPY until proven otherwise. All right. And now I'm still a bear because we are going to recession. But if they want to give us a Christmas run, and I've heard a bunch of my friends on Wall Street talking about the SPY potentially at 418, which would be the S&P at 4,180, 4,200, 4,200, 420 on the SPY. I've still heard at least half of my friends on Wall Street talking about how they're still bullish in their firms and how they believe the SPY is going to break north by the end of the year, by Christmas time. And we're going to have that Christmas rally that we see almost every year. Okay, so on the downside, I've now spoken about the bull case scenario. And please, if you have any questions, please ask them on the side. Next, before I talk about the bear case scenario, understand I do my live streams every morning at 8:30 a.m. Romeo on our platform does his live streams on our Discord. He's doing one at 9:15 this morning. He does about 2 to 3 a week. So he actually gives you the run into pre-market, right? The bell strikes. He's telling you exactly what he's looking at. He's a technical analysis kind of guy. He charts everything. So he's looking at the candles. He's looking for the breakouts, and he's been on fire. So please, if you're looking to get good morning trades, I like to trade later in the day, but good morning trades, join our platform. It's right there below. You get 7 free days once you verify yourself. So we have those rooms. We've got Love Teaching. And then again, we have the Flow and Algos rooms. So a lot of people pay Unusual Whales or some other service $100 a month to get their alerts on, hey, there's unusual activity. Well, our platform offers that as well. We have the Golden Sweeps, Unusual Activity, Bullseye Trades, and then best of all, you can type in your own commands to see where big money is going in the market. All right, back to the SPY. Sorry. So again, bull case scenario, 393 is support, 394 is better support. We break up to 397. If we break 397 and 398, which was the top yesterday, Friday was 397, like 81. If we break through it, then you will see 401, 405. This week is a shortened week. We have trading Monday, Tuesday, Wednesday, and a half day on Friday. Thursday, obviously, closed for Thanksgiving. Now, let's talk bear case scenario. Let's talk about war in Russia and Ukraine. Let's talk about the use of a dirty bomb. I saw the 2020 piece where, basically if Vladimir Putin strikes this Ukrainian power plant, there'll be radiation everywhere, and that'll be his dirty bomb. Will he do it? He's been forewarned by a ton of other countries, including the U.S. and backdoor channels, things of that nature. But that could be a bear case scenario. China, COVID cases spiking. Let's remember what happened last year. COVID cases spiked. They would lock down cities. City of 14 million people, locked down. And then they started narrowing it. And then they would lock off 3 or 4 blocks. And they would keep these people locked up for a week. Now it's probably only 3 or 4 days. The point is, it will hurt the Chinese economy. Now, how else will it hurt the U.S. economy? Well, you have stores and factories and everything in China. You've got the Apple factory. The workers walked out last week. You've got the Tesla. You've got the stores. You've got, everything. So it's all interrelated. So understand, if China has issues, and they are our largest or one of our largest trading partners, China, we trade with Canada, the UK, Mexico. But understand, the amount that we trade with China is very significant. And if their demand goes down and their supply goes down, because we buy a lot of Chinese products, then it's going to be a harder hit recession. So that's your bear case scenario. Now let's talk about how it's going to affect the SPY. And again, we'll zoom in and we'll focus on today. All right. So again, today I see support at 393, 394, where we saw it all last week. If for some case we break lower, let's say there's news, let's say there's no news. All of a sudden, 2 big firms decided they're going to sell off because they think we're heading to recession and they think the markets are going lower instead of a Christmas rally before the end of the year. If that happens, you're looking at 390, what we were 393. When we break 393, you're looking at 389 and change. And if we break 389 and change, again, bear case scenario, you're looking at 385. So yes, as we sit at 396, my bear case scenario is us going back to 385 later this week, down 11 points, down 3% on the SPY, or in the markets in general, down 3.5%. Bull case scenario is, shoot, we saw a ton of consolidation last week. 393 was the low, 394, 394, 394, up 393 on Friday. And we're going to bounce higher, and we're starting at 396. And we open at, let's say we drop to 394 and quickly bounce back to 396. If we break through that 398 barrier on the SPY, or on the S&P, it would be 3980, okay? Because a lot of you like to play SPX. If we break through, you're going 401, 405 by week's end. Now, as I mentioned, I either have bronchitis or I'm battling some virus, respiratory virus right now. So I got to keep this a little shorter today, but I'm going to look at questions. If you have questions on any stocks, please let me know. If you've got a question about my trading strategy or your trading strategy, let me know. I made a post over the weekend. I'll talk about this real quick. I mentioned that playing blackjack was a lot like trading options in the stock market. Now, let me tell you what I meant. I used to play blackjack when the pandemic started. I played for 8 months. I made 180,000. I put myself through college playing blackjack. I was 18 years old, went to Atlantic City. I won over $100,000 spread out through 4 years. With that said, here's the catch. When people go in and they bet a large amount, they just sit down at the table. Here's 500, lose. Here's this, lose. What it is it's a grind. It's the same as the market. You're watching the market. You're getting a feel of the market. You're coming up with your strategy. You're making your entry. If your entry is no good, maybe you want to add to it. Maybe you want to do a stop loss, which is the same as walking away. So when you're playing blackjack, the minimum bet on the table is $25. Great, it's 25, 25, 25. When you feel that run coming, meaning you're drawing out, you're getting blackjack, the dealer's breaking, that is when you're seeing the market well in the same capacity. So you raise your bet. When you're seeing the market clearly, and I was last week when I said 398 will reject, 394, then we go back to 396. When you're seeing it clearly and you're seeing your predictions come to fruition, that's the time you can say, okay, instead of buying one option, I'll buy 4. Instead of buying 4, I'll buy 8. When you're seeing it poorly, right? Same as when I'm playing blackjack. Oh my God, the dealer just drew out 16 to 21, 15 to 20. You know, I just broke 12 to 22. I'm just not getting cards. What do? Minimum bet. So when you're not seeing the market clearly, I mean, I've seen people on certain platforms do like, dude, I've had 3 straight losing weeks. If you're having 3 straight losing weeks, guess what? The next trade you make is probably going to be a losing trade because that's the streak you're in. So what you want to do is you want to paper trade it. You want to mental trade it. Okay, I would have bought this Roblox option at $1.10. I'll check on it in half an hour. Holy shit, it's 76 cents. I would have missed entry by $34 or about 37%. You say to yourself, there's my problem right there. Now, if you wanted to buy it for $1.10 and you're seeing it 82 and you have the same strategy and you do believe you're going to be right, then it's fine. Buy a contract at 82. Buy 2 or 3. The point is you're not paying $1.10. Me, here's how I deal with my issues. First, I have a 5-minute rule, meaning whenever I'm going to enter into a position, I say, you know what, Matt, you're a little aggressive. Just wait 5 minutes. You were going to buy 10 contracts at $2.20. Wait 5 minutes. 5 minutes later, now it's 205. I'm like, holy shit, it's actually going down. It can drop further. Let me stay away from that trade for a little bit longer. I did that 2 or 3 times last week. On the way out of a trade, I'm like, oh, my stuff is spiking. Let me unload. Let me get rid of my options and secure profit. Generally, if I'm in a good trade, it tends to get better. So I am so eager to be like, yeah, I'm a winner. Claim a winner. I sold it. I'm a winner. And then what happens 5 minutes later, it's like 40% higher on my trade. I took 40%. I left 40% on the table. So for me, tell myself 5-minute rule. Now, what else do? I tend to trade too early in the morning. I see something at 9:30, 9:32, 9:37, 10:14, 10:35. I don't want to trade that early. Why? Historically, I know my trading sucks early. I tend to pay too much. I don't think I'm chasing. I think I'm calling the bottom and it drops further. I think I'm calling the top and it spikes harder. So I tell myself, dude, you just don't have access to your money. It's like taking away someone's ATM card. I do not let myself trade. I'm doing it this week until at least 11:30 a.m. If I want to enter something, I'll take my pen and I will paper trade. I'll be like, I would have bought this at $23 each, something to that extent. What will I do at 11:30? I will go back and I will look. Geez, I wanted to pay $230 for these things. They're $115. I would be down 50%. So I tell myself, dude, no access to any type of trading money until at least 11:30. Now, understand, my trading from 11:30 to 2 o'clock to 3 o'clock is so much easier because I process the market. I look at patterns of the market. I see when the buildup's coming. I see when the sell-off is coming, and I alert people on Discord. I'm great with market direction. What I'm terrible with is having FOMO. I'm like, oh, it's going to drop. Let me get in right now. And then it spikes higher, and then it finally drops. The point is patience, time. Now, I spoke last week about patience, patience, patience. That's actually the wrong word. I didn't want to use patience because patience sounds like your grandmother sitting on the sideline like, oh, I don't really want to touch this trade. But what it is instead of patience, I'm more or less telling you, do not rush. Every time you're about to enter a trade, just tell yourself, There's no reason to rush. If you're running to your computer because you saw something, you're like, I want to buy this. Or you see something on the screen, you're like, I got to buy this right now. I'm going to pay the ask. I'll pay a little more. It's on the way up. Do not rush. That is what I wanted to tell everybody. Just don't rush. Take your time. Why? Because nobody's perfect at calling the top or bottom. Nobody's strategy is perfect. And although when we think we're going to be 100% correct, and this is the perfect time to get in, what do we acknowledge about ourselves? Geez, it's almost never the perfect time. There's always an extra 5% to the downside or 8%, same as the upside. Okay, so let me see if we have any questions right here or comments that we could possibly talk about. All right. We shorting Futu this week. Just kidding. Thoughts on when short credit card companies? Okay, so Futu is not like a credit card company. Futu is like Webull, like Robinhood, trading platform. So I wouldn't short them. But yes, if we enter recession in 2023, and I already gave you 3 banks that best case scenario was recession: JP Morgan, Bank of America, and Deutsche Bank. Best case scenario, recession next year. When we enter recession, what's going to happen towards the end of the year? Let's just skip next year. End of the year. What's everybody doing? Everybody's already in credit card debt. And I'm going to say everybody, I mean the retail trader, the customer, the consumer. People are using more of their credit cards these days. So now we have the credit cards, and you're looking at your credit card balance, and you're saying, shoot, it used to be 0. Now it's 4,000. I have a $10,000 limit. End of the year is coming up. Christmas time. You know what? I can't pay this 4,000. So why don't I just spend 4,000 more, buy some holiday gifts, and I'll worry about the 8,000 next year as we're heading into a recession. So understand, credit card debts are going to go up. Now, what do I think is going to happen? I mean, we've seen companies like Affirm keep getting hit. Affirm is buy now, pay later. A lot of people aren't paying later, and we're going to start seeing that first. And when companies like Affirm or Upstart start reporting these kind of things, it's going to hurt other companies like a Visa, MasterCard, American Express. Now, these companies make money every time you swipe your card. Every grocery store swipe, cigarettes swipe, gas swipe. They make a transaction fee, and I believe there were like 400 billion transactions last month, something to that extent. So that's good for them. However, it's going to be a bad case scenario when people cannot pay. It's the same way if people cannot pay their mortgage and there's foreclosures, right? You're going to see the same thing with credit card debt. You're going to see a ton more bankruptcy filings, which are Chapter 7 or Chapter 11, which are personal bankruptcies. Let's see what else we got here. What's this one say? Oh, I guess we're not going to see that one. Okay. Anyway, that's basically it. Please join Romeo, who's going live at 9:15 on our Discord. Verify yourself. Again, I'm sorry for the shortened session, but I just have a ton of bronchial issues here. So let's just recap the SPY real quick for anybody that missed the earlier. Okay. Understand we're sitting at 390, probably 5 pre-market. We closed at 396. On the way down, we've seen support at 394 and 393. Do I think we'll go under 393 today? That's a great question. No, we saw support there on Friday. We saw support there since the previous Friday. So you're talking about 6 straight trading days where 393 or higher has been the base. So that is a key level that I'm looking at, because if we break 393 today to the downside, I don't mean we go 392.56, because sometimes when we break a level of support, it goes slightly there under before it bounces. But all of a sudden, if you're checking in the afternoon or late morning and you're seeing 392.10, then that wasn't consolidation last week. Then we're going down. However, I don't think that. I saw the same base day in, day out until we break lower. I believe we're still going to consolidate between 393 and 397, 398, right? 397, like 81, which is also supply zone. So we're going to consolidate. What's going to happen? Once we break out, if we break out bullishly, you're going to see 405, 409 on the SPY by the end of the year. If we break out bearishly, you're definitely going to see the 385 number. And there's a chance end of the year, if we're bearish for the next month and a bit, that you're going to see the SPY back at like a 377 level or 376 level. So hopefully that helps everybody. Please give thumbs up, make comments. Everything YouTube does is analytics. And I appreciate everybody watching. And I'll see you guys later on Discord or tomorrow morning on YouTube. Thank you, everybody.